Okay, topic of this video, trend days. Using volume index to and price action to be able to recognize trend days as they are occurring. You don't need to be a magician and predict the future. Well, magician is not the right word, but you don't have to have the ability to predict what's going to happen. Okay, and you don't need to have the holy grail type of indicators either. By monitoring price action as it's unfolding and a solid trend indicator, pretty much be able to recognize trend days or trending price action until the market changes that type of condition. So we have volume index and we're going to be using that as our trend indicator, and we have price action up here. And what I'm showing you here can be used on any market irrespective of what I have on this chart right now. Don't worry about that. Whatever futures stocks you're trading, you can do what I'm about to show you. Everybody knows, if you've been around trading even just a short period of time, any book you pick up, it says trend days, higher uptrend, higher high, higher low, downtrend, lower low, and lower highs, right? Okay, so we have a low, a lower low, and this is a high and a lower high. Okay, and a lower low, and then we have lower high, lower low, lower high, lower low. In between this high and this low, there was a higher high. Well, not a higher high, a higher low, a higher high, a higher low. Okay, so I'm not skipping those. I just wanted to make sure that you guys understand I'm seeing that. The point is, it's not really important what's going on here, these little reaction points in this area. The real critical part is the duration between the lows. So if you have a downtrending action, or your indicators are showing you downtrend and your price action is confirming that by its action, the point is, or the critical part is the duration between the lows that are being made. A strong downtrend is going to quickly make new lows, new lows, new lows, new lows, and duration. The key is the duration between the lows. Okay, lows, new lows. Okay, this right here is as long as you wanted to get. Okay, between these two lows. Ideally, a strong downtrend, lows are occurring continuously. And notice that this gap here occurred during the lunchtime, and after right around 1 o'clock we started back into business again, lower lows continuously. Okay, and that kind of continuous lower lows on a downtrend day occurring with short time span between shows you the aggressiveness of the sellers or the lack of the aggressiveness of buyers. Okay, in other words, lack of buyers, aggressive sellers. Okay, they sell, take profits. As soon as price moves up, more sellers come in, seeing the discount, they sell again, they sell. And that's the kind of aggressiveness you want to see on a trend day. Okay. In contrast, you'll get a market open, okay, like let's say we open here, we move up, it's a gap up, you get a strong directional move as it did happen here, and then you put in a low, and then we start making these small little reaction eyes go up, and the next low that occurs 2 hours later, and it just barely makes a lower low and then quickly moves back up again. Okay, and then the next low that occurs might not even occur, or if it does, it'll be a couple hours later again. Now, when that happens, that's actually not, when you're seeing that type of duration between your lows, that's your hint. Okay, so you have a low and you see it, and there isn't been another low for more than an hour or so. Okay, that's as price action is unfolding, it's telling you that it's not a trend day. So on a strong trend day, during the liquid hours, during the high volatility hours, which is pretty much a few hours in the morning and a few hours in the afternoon during that session, you want to see continuous lower lows. Okay, so that's price action. The reason I went over that, because you can't get all of your information from your indicator, but you can get a lot of it, and you want to see the same action in your indicators that I just explained with price action. Lows, just consistently you're making new lows. Okay, now so you're seeing that with price action, but of course you want to see that in your indicator too. So you have your delta weight, it's got a bearish bias. For a period of time we go up again, a bearish bias, so that's good. You have your volume weight is bearish, and then now you have your volume trend is bearish and it's below the volume weight, okay, so that's what you want to see, and both components are below zero, and so is the volume index. So you have bearish activity when your volume index indicator, and price action is showing you exactly what you like to see on trend days. And as long as that stays up, because this could happen and then you don't know what's going to happen in about 30 minutes, 40 minutes, and you don't need to worry about that. What you need to worry about is what is occurring currently, and trade that. Trade what you see, and then be able to adapt once that changes. Be able to switch right away. Don't be stubborn. Don't be, no, this is definitely a trend day and I'm going to keep shorting when price action is not doing what you normally like to see on trend days, or your indicator is doing that. So once you have these two concepts down, then it's just a matter of using a timing indicator, okay, or method of timing your trades. Now on a trend day, you need to have a good indicator that will be able to catch all the major reaction points, because trend days move fast, the pullbacks are shallow, so you need to have an indicator that will work under those conditions. A lot of indicators need a lot of time for them to give you signals. In other words, what I mean by overbought, oversold indicators, and those are not good for trend days, because the strong trend days, the pullbacks are quite shallow, so you need a solid indicator for that. So here, what we're going to do is, my favorite indicator is Z10 oscillator and VB oscillator, the volume breadth oscillator. I'm going to turn the Z10 on. The Z10 can be used on any market, and that's why I'm showing it here. If you're an index future trader or stock, or you trade the US stock market, then I would highly recommend to also use the VB indicators, just to make sure that you don't miss any nice signals. So essentially, trend is down via our volume index indicator, okay, and we're just going to take, like a robot, we're going to take every short signal that the trend tells us that we can take. In other words, trend is bearish, we're going to take every short signal that the oscillator generates. And so at this point the trend was down, okay, we're going to take short signal here. Let me do this, let me mark all the short signals on here, so we don't waste a lot of time on the video and the video runs out, and then we can just take a look instead of me going through them one by one. What I did was pause the video and just put those on, so you don't have to watch my drawing skills. Okay, so as you can see, all of these signals were generated by, this is my favorite technique, you can use your own, via the Z10 oscillator, and you can see how many short signals were generated. During the lunchtime there was not any generated again, okay, it didn't take us, all of them were profitable. And that's the beauty of a trend day, and you need to be all over it. When you see a trend day or trend day action, be all over it, take advantage of it. The way you can do that is by preparing. Take notes, exactly, study some trend days, take notes, what your indicators do, what price action does in trend days, and that way you'll be prepared when a trend day occurs live, and you'll be able to take advantage of it live. Hope that helps you guys.